Hey, this is Sasha. Thank you so much for joining me today. Today we have a question directly from someone that submitted it by voice. So you'll get to hear the question. It comes down to returns on your investments and what can you expect to make. So let's get into this. I'll share with you some thoughts and insights and then we'll go from there. All right, so before we continue moving forward, I do want to let you know that you could submit your question, if you have a question by voice, to go ahead and go into our Traders Fly website and go to that support section over here, and you can submit a question by voice. And even in the contact section over here, there is a click here to submit and record a question. But really what you do is once you submit a question by voice, you just hit this recording button. It'll record it for you, and then you'll go ahead and be featured on the show if your question is a good one, which many of them are. So let's take a listen to today's question. I'll give you some thoughts and insights for the future.
Yes, hello. I wonder what your annual return is and what I can expect as a student of you to get for annual return in percent of my account. Thank you.
All right, so a pretty simple and direct question. I think it's a good one to think about as you go ahead and start looking at returns. Now, this really just comes down to the types of trades that you're doing. So for example, if you're doing swing trading, day trading, it's going to be different types of returns. And of course, you got to look at the effort that you're putting in. Somebody who's day trading has to be at the computer all the time. So a 6% return, let's just say on an annual basis, is not too bad. If you only got to work 1 or 2 hours, let's say a month, that's not too bad, right? But let's just say you got to work 20 hours a month and you're getting a 7 and 8% return. Is it worth the trade-off? So always be thinking about this as we continue to go into this video a little bit more in detail, because you look at it in terms of time. Managing money still takes time. And if you go ahead and somebody works 1 hour a month or 1 hour a year and they make, 5%, is that worthwhile to work 20 times as much to make an extra single percent? Sometimes yes, sometimes no, depending on your personal situation. So in either case, depending on the trading that you're doing, you want to really take a look at it and evaluate. Swing trading, day trading, option trading, it's all going to be different. When you look at swing trading and day trading, it's going to really depend on your money management skill and also market conditions and your ability to stock pick. That's a little bit more difficult to estimate. Some people make as little as 0 to a negative return, to some people making anywhere between 5, 10, 20, 50, 200% return per year, depending on how good they are. Now, when it comes to option trading, it's a little bit easier to kind of predict as far as the students that we have and as far as the people that I've worked with, simply because the consistency that people are looking for and the type of audience that I've worked with. Mom and pop, retired people, single people, they all have a little bit of a different risk tolerance. And that's really what you should kind of look at. And that's really what will kind of determine it. I will, on average, tell you that most people will look to make about 5% a month return on their investment. And that's just kind of, hey, sometimes you'll make maybe 7, sometimes you'll make 2, sometimes you'll be down 1% or 2. But on average, you're looking at about 5% a month. So for example, let's just say you're single. It's going to depend on your risk levels. For somebody who's single, who's got kids, who's retired, who's working, they all have different risk tolerances. And depending on how you set up your trades, in the same way that if you're a day trader, you might have higher risk tolerance or a lower risk tolerance as a day trader. Everybody's different, and you need to find the risk tolerances that match for you. So if you're single, let's say a lot of them have a higher risk tolerance. You don't have to worry about kids. But even then, in that level, okay, let's say you've got your full risk on, 100% risk. You're good to go. You're jumping out of airplanes. Well, that's at the high level. But even then, even if you're in the high range, you still might have a low risk tolerance of maybe 70% compared to somebody else who's at 100%. So look at those levels. And it really just depends on you. And that means you might have, if you're at a higher level, you might make a little bit more return on investment, let's say maybe 16%. But you also have larger swings and fluctuations, which in some months you might be down 7, 10% or more. So really just depends on the trades that you put on. If you've got kids, hey, maybe you're aiming for a little bit lower return. And why is that? Because you just don't have the time. You don't need the extra stress. So maybe instead of 5 or 7 or 16%, you might go ahead and look to something maybe around, let's say 3% on a monthly basis, right? We're talking about a month here, because when we're dealing with options, we're looking for selling premium each month, okay? And that's really what we're getting down to, because we have a lot of people that are into trading options, or at least get to that point. Okay, so you might have a 3%, but if you're kind of really got 6 kids, you just don't have time to juggle, maybe you're looking for a 2% a month kind of return, right? If you're retired, hey, you could be, again, low risk tolerance, low risk level. It could be similar to people that have kids. Maybe you're at a 4 or a 5% return that you're looking for. But again, at a low point, you might be, hey, a 3 or 2 or maybe even 1% return per month of investment. So everybody's at different points, and somebody who's a working mom and pop, because you have money coming in, you might be looking to shoot for, let's say, a 6 or 8% return on investment, if you're kind of at the higher end. And maybe if you're at the lower end, maybe at that 6% range, because you're still a little conservative, but you got money coming in, but you're okay risking a little bit more than the average. Okay, because here's the average, 5%, a little more than the average, because you are working and you have money kind of coming in, and you're okay with a little bit more risk maybe. So anyways, it really just comes down to you. And I'll show you here just a quick trade example. Here's what I'm talking about. Here's an option trade for you. And if we take a look at the calculator, I'll just give it to you right now. This trade's been up for a couple of days right here. And when you look at this trade, you can see we basically right now are profitable about $370. Well, $350, it fluctuates and so on. So let's say about $350, $330, and the capital that we used is $4,600. And this is a skewed butterfly or broken wing butterfly, depending on the terms and words you like to use. In either case, $4,600. And when you look at it right here, you're looking at, in a few days, 340, 350. You're looking at us about 7% in just here a week or so that this trade's been going on. So you can see it's not unreasonable and not realistic. Here's another one example here. I have Netflix, which when you look at this one right now, this one is profitable about $58. So not extreme money, but you could see here, this one, again, also a couple days on it, about 1090 is the capital used. So if we go 1090 on the capital, okay, and then we divide that by about 58 on the profits, you're looking at about 5% right there. And of course, there are going to be some losing trades, so don't think that these are, you're going to constantly have winners. And that's the point, is out of 4 or 5 trades, you might have a few winners like this, and then you might have 1 or 2 losers. And then all in all, it should balance to roughly about 5%. And again, that's looking at a person with an average risk tolerance, normal risk tolerance, normal understanding, or an average decent understanding of trading options. They've got the grasp of it. They've been doing it for a little while, and you kind of there in the middle. If you've got a huge extreme risk tolerance, you're shooting for the moon, you're shooting for the stars, of course you can make more. And if you're really conservative, hey, I got friends and families with disabilities, sometimes some people who are working a lot on their physique, trying to relearn to walk, rehabilitate themselves. They don't have the time to do trading as much like this, or be a full-time trader, or do a lot of option trading. They're trying to put on 1 or 2 trades a month, and that's it. And they might only be looking at a couple of 1 or 2% a month. So again, your situation's a little different. You have to evaluate your personal risk tolerance. What's the match? What makes sense for you? Do you like pickles on your hamburger, or do you like tomatoes, or both? Or do you want mushrooms on it, or do you want bacon on it? Everybody's a little different. So you got to match up your risk tolerance with where you're at and the type of trading and your experience. And all in all, you should kind of come out to about 5% for most people on a month-to-month basis, meaning some months you might have 7 or 8%, other months you might have down 1 or 2%, or maybe only 2% that you're making. So, but that just hopefully gives you an idea and some insight to what you could expect as an average person. You might be the exception, you might be outstanding, and you might have huge amount of winners. More power to you. You might not be interested in having kids. Then again, your returns could skyrocket. But, look at your life and make your trading balanced with your life. Because in the end, there's more to life than just money, as I always say. Anyways, thank you so much for joining me. Remember to hit the subscribe button right here if you're interested to getting some other future videos on YouTube, or join the newsletter list or ask a question by voice by clicking the link over here. Thanks again, and remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.